What's up, traders? So in this video, we're going to talk about gold. I haven't done a gold video in quite some time. And we're also going to talk about Fibonacci levels. So gold has been on a crazy rally for, well, the past month, really. And, you know, the question is it about stop? Is the dollar about to strengthen? And one of the best ways to map things out is using Fibonacci. So I want to go over that, maybe take a look at the S&P 500. And let's get right into it. So I think that, you know, these huge levels that we hit, 1940, I was talking about 1920 back when we were around this level at like below 1900. And so we hit it and kept on charging. So now whenever I'm looking at levels like this with what we have going on here, number one, in the accelerator group, which is my mentoring group, you know, I always talk about looking left, right? The importance of looking left. And what do I mean by that? Zooming out to a longer term time frame and then seeing what it is that we have to the left-hand side, especially, you know, in terms of just a massive move like we're seeing here. Take off this envelope. We'll even take off the SMAs there. So there's two different levels here that we'd want to look at specifically when we go draw out our Fibonacci. So I'm going to take the Fibonacci retracement tool, go from this high. So you can see here, this was right on a pretty close to 61.8. Now, if I want to, and this always confuses people, they're like, okay, so how do I draw it? If I'm looking for an up move and the retracement of that, I would just go from the top down, right? So you can see now, if I wanted to, just the flip side of that, if I wanted to measure this, like the degree of this uptrend, I would just start at the bottom and go up, right? Because these Fibonacci levels are percentages, right? So now if say, for example, we turn around right here, I'm not saying we are, but that would measure this move. And so that's just a simple way to remember Fibonacci's and the way, you know, if it's up, down, how you draw them. I know for most beginners, that is always confusing. So now it's interesting to look, though, from this high here. And if you discounted that high, and this is what I was looking at before the video, because, you know, we had this move and then pull back. So I'm not saying that is the definite high, but we're approaching at some interesting levels. I really like this 86.3 fib retracement. And so, like, if I'm looking left using these long-term fib levels, I'll take a box and then box out what this might look like. So now I've got a pretty good target mapped out there. Now, if I go back here to where I was, or to where this top is, so to speak, you know, you can just see what lines up, how that lines up, and what these different levels are depending on which one you're going to choose. Now, this 78.6 right here, that lines up with, I mean, geez, this is a nice zone right here, order block, supply and demand, whatever you want to call it. But that's a key level right here, right? So I'll map out these levels. I did a video on mapping out these zones. Hopefully y'all saw it. It's in my Telegram. If you're just watching this on YouTube, click the link below for access to my Telegram. And by the way, like, subscribe, comment to this video before I forget. That would be super helpful. So now we have some targets here mapped out on this long-term 4-hour time frame. Remember, this level that we drew that from was equal to this previous all-time high, right? So that is a significant level. Just, it's worth pointing out there that is what we're drawing this off of, right? So we made an all-time high. And honestly, I mean, if you went out to this, could even be a double top. I made a video way back about that, but I think it's invalidated by now. But that's the importance of going out to these higher term time frame. We're on the daily now. Let's go to the 4-hour. This is where I like to do especially my weekend analysis. Now, I just pulled up here the momentum indicator. This is my momentum-based indicator. And so you can see that I created and have a whole strategy around. And, you heard me talk about it a lot, but it's what I use. And it's helped me to get funded over 7 figures of capital. And, it's the strategy works. And I'm going to show you how that works right here. You can see this lower momentum is measuring out the strength of the trend. This is slightly faster, and you can see these pullbacks here. And of course, there's more to the overarching strategy than just that. But you can see these are potential trade setups you could be taking off of the momentum using this as a guide, right? So it's like a map. We're not just following the indicators, but we are identifying the trend and then looking for these high probability pullback points. It's just like a compass on a map. A compass is with any strategy. Think of it, you're not following the indicators, you're using them as tools to show you and highlight areas in the market. And that is, in my opinion, really the only way to view indicators, because you don't want to just follow them. You want to actually be trading and developing a system that helps you to read the market. So we are reaching some significant zones here. And so what I would do next is just check out these different extension levels. And the reason I'm doing that is I'm looking for some sort of confluence here. Now, interestingly enough, we're at the 161.8 of that previous move. I'm not saying that that's valid, but I'm just looking for confluence. By confluence, I mean areas where things start to line up. It's like, oh, okay, this is a hot spot. This is an area where there might be a reaction in the market. So, we've been pressing higher. We have our Fibonacci levels mapped out here. This 86.3 is right above 2000. So now if you think of where we are and where all the liquidity is, and the fact that this was a former high that we tagged, I feel that the odds are, a retest of that 2000 is super, super, super likely. But, we have the 78.6 approaching at 1972, and that would be my target, So the dollar just keeps taking a pounding. We can look at the dollar index right here. I thought maybe we would get a lift last week. It did not happen, just a small little reaction. And, the bearishness and dollar weakness keeps coming in. We're trading in this huge wedge right now for the dollar. So some sort of reaction here to maybe pop, we get a move up to 104. Maybe that'll be a deeper pullback in gold. But, we are at a significant support level. And if this breaks, then it's going to be super, super, super bearish for the dollar. So that is a simple way to map out your Fibonacci's. Remember, going out to those higher time frames. This is how you're going to get those really, really effective support, resistance, and key levels and zones. Now, it's not necessarily the only thing you want to trade, but all of a sudden you have waypoints. And to go off the map theme, you want to be able to have ways that you see and interpret the data that the market's bringing you real time. So hope you enjoyed this video. You want more information, you want to trade live with me. I'm funded over 7 figures, which is insane, of trading capital now. And by grinding, by using my strategy, by dialing in my risk management, psychology, and then going for it. So if you're ready to go for it, you're ready to stop losing, click the link below, fill out the application. We'll get back to you, and have an awesome weekend, everybody. Peace.